But Lynch's central point is historical and blunt. Over the long run, stocks beat bonds. He cites the long-term average returns to show this. Since the year 1927, common stocks have returned about 9.8% a year on average, compared with approximately 5% for corporate bonds, about 4.4% for government bonds, and about 3.4% for treasury bills. Those differences look small on a single-year basis, but compounded over decades, they are massive. For example, he shows that a hypothetical $20,000 invested in corporate bonds in 1927 would have become roughly $373,000 after 60 years, whereas the same $20,000 in stocks would have become about $5.5 million. The stock premium is the wealth builder, but caveats abound. Stocks are riskier. Giant, famous companies can and do disappoint. Lynch reminds us of household names that faded from prominence or stagnated for decades. A so-called safe blue chip can lose value or underperform for a very long stretch. Buying even a sturdy company at a bad time can produce years, even decades, of mediocre returns. Likewise, bonds are not riskless. Rising interest rates can hammer bond prices. Callable features let issuers take back attractive yields, and municipal and corporate defaults, though rare, do happen. Lynch refuses the lazy binary that treats stocks as gambling and bonds as prudence. Instead, he reframes investing as disciplined gambling, or better, as a game where skill, information, and discipline tilt the odds in your favor. He uses a 7-card stud poker analogy. In poker, you see a lot of information face up. Skilled players evaluate the odds and raise when the probability favors them, fold when it does not, and accept occasional bad beats. Investing is similar. By asking the right questions about a company's earnings, cash flow, and competitive position, you reveal the face-up cards and can judge whether the odds are in your favor. Good investors accept that some proportion of their picks will fail. If 6 out of 10 or 7 out of 10 behave as expected, that is more than enough to produce great results.